For athletes, when you're thinking about how do you protect yourself in the event of injury, sickness, or severe illness, as in total and permanent disability, having an insurance policy there is protection. It's like a safety net for you in case something really sinister happens, and you've got the ability to fall back on something and in essence replace your income or give yourself a lump sum so that you can continue to have the life that you are on track for. These benefits exist within your super fund, which is fantastic. But as you say, Nick, most people don't know that they're there.
You're listening to Becoming Match Fit, the podcast helping athletes and high performers build confidence, clarity, and opportunity on and off the field. I'm your host, Nick Greentree. Welcome to Becoming Match Fit. I'm Nick Greentree, and today we are talking about the superpower that most athletes ignore. That's right, superannuation. What is it? Why should athletes care? And how to get rid of the overwhelm that can surround super and finances. Before we jump in, just a quick disclaimer. This is general information only and not personal financial advice. Everyone's situation is different. So if you are needing some advice, please reach out to a qualified professional and get some advice that is right for you. Today, I am joined by the amazing Naomi Holmes. She is a financial educator and the founder of Her Money Matters, which is a platform created to make learning about money feel approachable, empowering, and dare I say fun. She has a background in sport and holds a degree in sports science and has also spent nearly 30 years in the financial services industry, including roles at ANZ, Westpac, and AMP. Welcome, Naomi.
Hi, Nick. How are you?
I am very well, and I am super excited, pardon the pun, to have you here today. Coming from financial services background, I have been wanting to do this episode for a long time, so thank you for joining me.
Oh, it's my absolute pleasure. And trust me, I know those puns. I know them all.
Had to get one in there to begin with.
Had to.
Okay, so I love what you're doing with Her Money Matters, but can you give me a quick overview of why did this all come about? Tell me a little bit about your background and what you're up to.
Yeah, thanks, Nick. So as you said in the beginning, I've spent a lot of my time, in fact, nearly all of my working life in corporate and working for some large institutions across Australia. And I had a change of situation about 12 months ago and decided that I felt the best use of my time was really dedicating my knowledge and my experience towards helping women just understand money in so much more detail, because it's one of those things that can be scary or terrifying, or people just you're afraid of or don't want to talk about it or very much ignore. And so, I wanted to try and make learning about money a little bit more fun. And so that's what I've devoted my time and energy to.
I agree with you 100%. It is definitely an area that needs more attention and understanding so we can have better outcomes for everybody.
Very much so. And when you actually kind of get underneath it and you start to learn and you take away some of those barriers that are preventing you kind of getting, your hands dirty with it, it can be so much fun. Like learning about investing. I know I'm a nerd, but, there's some really cool stuff to actually learn.
Absolutely. Okay, so super or superannuation, for those who may be outside of Australia and are not familiar with superannuation, is usually framed as retirement savings, which means a lot of younger people, especially athletes, completely ignore it.
Yes.
Why should athletes care about their super early in their careers? And are we missing like something then if we don't pay attention and switch off from it?
Yeah, it's a really good question. And it's one of those things that, I've found throughout all of my career is that because you probably get your first account in your teenage years, whether you're 16, 18, something like that, it's compulsory to contribute to superannuation in Australia as an employer, and you can't touch it until you're 60 or 65. Most people genuinely don't care about super, and it's not just younger Australians. So many of the people that I speak to still haven't paid any attention to their super late into their 50s. And so one of the things that I like to really spend time with is actually learning to love your super, Nick. And actually, the earlier you get hold of it and the earlier you understand it, the more you can make it work for you. And trust me, this is one of the most powerful tools you've got to actually make yourself into a really stronger position later in life. So yes, you need to, it's better if you can arm yourself with what it's all about earlier in life.
That's super exciting. Sorry, another pun.
Oh, here we go.
I'm going to stop it. Okay, so let's strip it right back. Can we start with the basics so we can unpack this for people who may have heard the term or are feeling a little confused about what are we really talking about here? How is it exciting? And I need to know more. So maybe in simple terms, if you can break that down.
Yeah, so superannuation was designed by the Australian government purely just to provide a pot of money for when you retire. In essence, that's as simple as it gets. So your employer has to contribute to your super fund all through your life so that when you reach an age where you can access your super fund, typically from 60 years and over, that's when this pot of gold or this pot of money is available there to help you then fund your retirement once you stop working. So for those early in life, as I said, I completely get it. Like, why do I care? It's 40, 45 years away for me, but there are so many reasons why it's important, which I know we're going to get into. And it's really freaking cool, I think.
For sure. I was definitely in the bucket where it was a bit invisible, a bit confusing, and can definitely relate to that side of things. Through some easy education, it's very empowering to be able to get your head around it and take control, I think. So I guess that's the
Absolutely.
aim.
And I have my own podcast, which I think we'll talk about, and it is the Her Money Matters podcast. And a few episodes ago, I have a podcast co-host, and she has avoided her superannuation for her entire life. So we spent the episode just going through exactly what you talked about, which is a little bit of education, because let's face it, superannuation statements, the annual statements are awful, like awful. And it's no wonder people don't pay any attention to them because there's so much information in there, so much legal information and just things that's required by law, but they're not a friendly document to understand. So we just walk through line by line the 6 key things that people need to know about the superannuation fund and tried to make it a bit fun, a bit more informative. And, if anybody is interested in doing that, you can jump into that episode and kind of get that guide. But I know you've also prepared a checklist, which is going to be available for athletes as well to be able to do a very similar sort of things. Just what are the key things you need to know about your super fund? And once you tick those off, the rest of it starts to fall into place.
That's exciting. We will put the links in the show notes for anybody who wants to check those out as well. So why is it, do you think, it's a confusing area to understand?
Yeah, I think it's like everything in finance, Nick. I think, it doesn't matter whether you're talking about a bank account or a mortgage or a car loan, an insurance policy, all of it just, it comes attached with so many horrible acronyms like PDSs, like TMDs, like all of this stuff that just goes with it. And it's no wonder people don't want to learn about it because it just is so damn confusing. So once more, my advice is to try and just pick 1 or 2 things that you want to learn about, for example, your super, and tick those off first. Because as we just talked about, once you get underneath it, it actually isn't that confusing. But for athletes in particular, because you've got chunks of your life where you'll be working here and then, maybe taking a break here or changing occupations or moving through your different career trajectory, understanding where your super is actually really important because you're going to take it from club to club, from place to place. And so making sure that the fund that you've chosen that you love is something that, is going to be with you for life. It almost becomes your life story, really, your super fund. It goes with you everywhere. So if you choose it carefully in the beginning, then it's something that you can take with you wherever you go.
That's an interesting point you make there. And ideally, we do have one super fund. I recall some years ago that there was a change to legislation around being made to open a new super fund if you go to a new employer. But I believe that, there's still a lot of people out there who have multiple super funds. Can you talk to that a little bit and explain, how that happens and what to do about it? Is that a good thing? Is it not a good thing?
Yeah. So it used to be that your employer could choose your fund for you and you had to go with the employer fund. That doesn't exist anymore. So every Australian has my choice. So you can nominate for any time you start work with a new employer, you can nominate your super fund and they can't force on you a fund that they want you to take. So just so everybody knows that, you can now take your super fund from employer to employer. But in terms of having multiple funds, because that's how the world used to operate, if you go onto MyGov under the ATO website, you can actually have a look at your superannuation funds and it's going to bring up, based on your tax file number, all of the different superannuation funds that you currently have. And so that's a really good check to do because you can just jump onto MyGov under your super and then you can see how many funds that you've got. Now, here's the thing. If you've got more than one fund, it's not necessarily a bad thing. It's just understanding, is there a reason why you've got one or more? more than one fund? If the answer to that question is yes, and we're going to touch on this in a second, the primary reason why you would do that is because of insurances. And again, we'll come back to that. But if it's not an insurance related thing, then having more than one fund means that you're duplicating fees. And so we want to try and remove that as much as possible so that the super stays in your fund and doesn't go to the super fund's admin team to pay for running your fund. And in essence, it's working for you rather than going away in fees and unnecessary a cost that you don't actually need to pay.
That's a good way of putting it as well. And I'll go back to that super statement. You can see on that super statement the fees you're paying, right? So if you're unsure about how many fees you're paying or multiple accounts and you're wanting to, that's important to you to help make decisions about moving forward, that's kind of where you can check it, right?
Definitely. But it's one of the most confusing parts of the statement,
Yes.
unfortunately. So there's 3 different fees that they have to disclose. If anyone has any challenges or wants to know more or wants to have a clarification with that, they can contact me and we can certainly have a discussion about that.
Are there benefits for athletes looking at their super early on in their careers?
Yeah, there's a couple of reasons. And I'd like to break it into 2 areas if that's okay. The first one is just understanding your investment and understanding what you're comfortable with investing in within your super fund. And so superannuation is an amazing place to invest because whether you know it or not, you will have probably hundreds, if not thousands of investments within your super fund. If you've never chosen anything in your super fund, most likely you'll be sitting in something that's called a balanced option. And under that balanced option, you're going to have a whole variety of different assets and things sitting in there. And as I said, anywhere from 500 plus up to probably 1,500 different investments will be sitting in that balanced option. The more money you have sitting in something called growth assets, which is things like property and shares, over time, the more likely you are to make money. The more money you have sitting in something called defensive assets, which is things like cash and something called fixed interest, the less likely you are over time to make money. Now, the reason why that's important is because you actually have choice over where your money is invested. And not a lot of people know that, certainly when they're starting out with super. So if you're ignoring your super, which so many people do, and you don't even look at it, then essentially there is no reason why you couldn't have your money invested in a high growth portfolio because you're not paying any attention to it anyway. And let's be honest, you can't touch it for 40 plus years. So because you can't touch it for that length of time, if it goes up and down in value, you're not going to pay too much attention and you're really not going to notice. But that's the best likelihood that you've got for your super fund to perform at its optimum. So once more, if anyone wants to learn anything more about that, please reach out because I can definitely take you through that and take you through what that means and what your options are. The other thing, Nick, that I really wanted to cover off is the First Home Super Saver Scheme. Now, this is an initiative, again, by the government that they put in because the cost of living was getting so hard and entry into housing was becoming more challenging. This is an initiative that you can actually save additional money in your super fund for the purchase of your first home. Now, you can only use this scheme once. And in essence, what it's trying to do is to say, okay, because super is actually a really tax effective way to have your money invested, you can build up your savings in your super fund to save for a deposit of a house. And the maximum that you can save is up to $50,000. So you can do that in your super fund at any point in time. You can accumulate this savings. And then when you've got the maximum amount that you wanted to contribute towards the purchase of your house, you notify your super fund and you tell them that you want to withdraw that money that you've contributed, and then you can go and use that for the deposit on your house. So it's a really good place for younger people to be thinking about saving. You can't access it. You can't get your mittens on it. So if, all of a sudden you wanted to try and, things became tight and you wanted to get a couple of $1,000s out, you can, but it means that you've used your one and only opportunity to withdraw for the Super Home Saver Scheme. So what you want to do is basically be committed to saving over time, building up your funds so that at some future point in time, you've got your deposit, 10,000, 20,000, 30,000, whatever it is, sitting in there that you then make that one withdrawal and you've got your deposit or partial deposit for a house.
Incredible. Quick question. Can a couple do it individually and then pool the funds to be able to increase the amount of the deposit?
Yeah, that's a great question. And absolutely you can. So essentially it's a single person. So it's an individual person that can do that. So it's based once more on your tax file number. So that's how the government tracks it. You can do it once. each of you can do that, and then you can use that money as a lump sum to then go and purchase a house.
Amazing. That's such a great initiative because it is getting harder and harder to own a house, especially here in Sydney. It's crazy, but
Definitely.
to know that that is an avenue to explore, it's really helpful.
Yeah, no, it really is. And not many people know about it.
So, if you are a young athlete thinking about this now, and you may not have, I guess, the thought around purchasing your own home yet, but the planning towards that could be really beneficial if you're getting your head around what I can do with my super and maximizing the value there.
Absolutely. And especially if you've got some surplus money each week. So if you know that your ultimate goal is to buy a house and you've got a couple of $100 per week surplus, it's a really good way just to grow that pot of money over time that potentially you won't miss because it's going into your super. You can't access it. You know it's sitting in there saving for your future house. And there is no time frame on it. You can access it just when you're ready. But knowing that it's there growing can be a really good incentive to help you continue to save and to help you continue to really plan for your future.
Definitely. And perhaps, and this is not financial advice by any means, but thinking about the difference of, if you are saving, what sort of account would benefit you most? There might be other options that you want to explore as well. But I think knowing that it exists as one of those options is really, really powerful.
Yeah, it's a really good point that you make, Nick, because you can save just in your bank account as well, or you can save in, a whole bunch of different places. I think the attractive thing about superannuation is that, as I said, it's not accessible. So you can't just kind of get your mittens on it if you want to, just for a random purchase. It needs to be much more intentional. And so if this goal of saving for a house is really important to you, it's a really good way to make sure that this money is sitting there for you when you're ready to make that purchase.
Love that. Okay, so thinking about the many things that athletes have to deal with through their careers, they can often have periods of when they're not selected for a team and things change, or they might have injuries or time away from the sport. What happens to their super during these periods, and what do they need to think about?
Yeah, so super literally just sits there until you can touch it, right? So if you're changing jobs or you're kind of going through parental leave or you might be in and out of the workforce for whatever reason, then your super is just sitting there slowly building for you over time for that point in time in the future when you can access it for retirement. And so that's where coming back to the comments that I made before about making sure that it's growing for you, it's working for you. And we're not going to have time to get into my favorite formula today, which is the power of compounding interest. But that is truly a magical formula. And yes, I am nerding out. But compounding interest is your best friend. So the more you put in earlier means that it's going to grow and grow and grow over time. And that's going to build a bigger nest egg for you once you actually hit that retirement age. So taking time out is really neither here nor there for the actual balance of your super fund. But clearly, if you're contributing to your super fund every year, then it's going to grow faster than if you're not contributing. So time out of the workforce means that there potentially won't be money going in. And hence, over the longer term, that will be impactful. But that's also just a reality of life. If you're not working, then you actually, unless you're wealthy and you've got money sitting in the bank, then you're really not going to be contributing to super. And so just having that plan and understanding over time, if I do contribute, it's going to grow and it's going to build. And so when I get to retirement, there'll be more there versus when I take time out for parental leave or when I take time out for injury or whatever else might happen in an athlete's life, then it's still sitting there growing for you for that future date.
Excellent. And I guess as well, and I know we've spoken about this before, perhaps a redefining of what retirement means in the athlete world, because I feel like in a 9 to 5 world, retirement usually happens at around, 60, 65, or it could, it's really varying these days and what that
Yeah.
looks like. And it's great that we have that choice. However, athletes seem to have two retirements, if you like. They have a retirement from their sporting pursuits and then generally do a career transition into something else. And then they have that, I guess, classic retirement as well.
Yeah, absolutely. That's correct. And there might be, as you're going through your sporting life as well, there might be the period of time where you're actually earning more income. So if you're a professional athlete and you're starting to get through revenue from whether it's endorsements, sponsorships, or other things that are coming through, and there's a finite period of time, a couple of years where you've actually got higher income, you've got lots of different options as to what you do with that additional money, whether it is increasing your savings for a house, whether it's increasing contributions to super or just thinking about investing. There's a number of ways for you to work out what you want to do with that extra money. But I think the moral to the story is that if you can plan that and you know that you've got extra money coming in and you want to maximize that whilst you've got that time of life, it's a really great thing to have. Being really deliberate in how you're allocating that money for your future is really important. Super is one option. There's other options that you consider as well, but maximizing or capitalizing on that time whilst you're at the peak of your sporting career is a great thing to be thinking about. To then, as you say, Nick, come into the first retirement phase, which is okay, I've finished my sporting life. Now I'm going to think about what the next phase or my reinvention after sport looks like, and then your super just goes with you.
I think if you're someone who's really focused on increasing your super balance for that long term, thinking about where is cash coming from for you, because athletes do have multiple income streams often
Yeah.
through sponsorship deals, not just through the club or through the league as well. So again, it's not to say you don't take on those sponsorship deals because it might take a different form, not cash. But I think it's just putting it front of mind as we think about not just this season, perhaps, but let's start to think a little longer term, if possible, to be able to set yourself up for success.
Yeah, very much so. And I think you just mentioned the word season. Thinking about your life as seasons as well. So if this is the summer season where you're making money, things are looking really good, it's sunny, the world is shining and everything's great, that's a great time to be thinking about how do I really maximize my time in summer? Because ultimately at some point, likely winter will come where things are a little bit more challenging and it's a bit harder, and having some money put aside for that period of life where you might be changing careers or you might be doing something else or you might be looking at parenting or something like that, then you've got some reserves set aside from the summer period that you've been able to bank.
You touched on parenting there, and it's a nice little segue into my next question, which is what should female athletes specifically know about super when it comes to maternity leave? Maternity leave, as I understand it, is a new thing in some sporting codes, which is fantastic. From a super perspective, what can we do to help these females?
Yeah, so it's a great thing that the government finally came to the table last year, Nick. So if you're on paid parental leave, then the government will actually pay your superannuation contribution for you up to the 12% superannuation guarantee rate. So that's not something your employer has to do. That's something that the government will do. And in fact, the first set of contributions for that are going to come in this July or second half of this year from everybody who is eligible in the 2025-2026 year, because this is the first year it's come into play. So that's a great initiative from the government to finally recognise that women do take time out and it's unfair, and we've got this superannuation gap in terms of the balances of women versus men coming into retirement. And so this is an initiative to really try and do something about that super balance gap, but it's only for paid parental leave. So if you're on non-paid parental leave, you still don't have your superannuation contributions made up for, and certainly if you're not working. So if you've chosen to exit the workforce whilst you're on parental leave, then obviously you won't have your super contributions paid then either. So just keep that in mind. So if you are on paid parental leave, you will get super paid for you.
Excellent. Well, that is good news. Now, again, you touched on insurance when we were talking about those statements. And if we had multiple accounts, can you talk a little bit more about insurance inside super? Like, many athletes don't realize it's a thing. Many Australians don't realize it's a thing, to be honest. What does it actually mean?
Yeah, so I'm glad you've asked this, and this is something that again I would love to work with a lot more people about. So if this is something that is of interest to you, please reach out. One of the benefits of superannuation is that you can have 3 different types of insurance in your fund. You can have life insurance, you can have something called total and permanent disability insurance, and you can have income protection. And so for athletes, when you're thinking about how do you protect yourself in the event of injury, sickness, or severe illness, as in total and permanent disability, having an insurance policy there is protection. It's like a safety net for you in case something really sinister happens, and you've got the ability to fall back on something and in essence replace your income or give yourself a lump sum so that you can continue to have the life that you were on track for. These benefits exist within your super fund, which is fantastic. But as you say, Nick, most people don't know that they're there. The reason in particular for athletes why this is so attractive is because if you go out and get a personal insurance policy, sometimes it can be quite difficult, depending on the sport that you're involved with, to get full cover. And that's just because as an insurer, they work off risk premium, if you like. And so if you're more risky, you're more likely to get injured, you're more likely to go on claim, they're going to put a lot more caveats and a lot more rigor around giving you insurance versus the person who's sitting at their desk who even if they have a broken ankle, can still turn up to work every day and they're not going to be going on a claim for income protection. So, utilizing the benefits that you've got within your super fund, you will have limits that you can access that are basically guaranteed. So, depending on the super fund, there'll be an amount of insurance that you can get for some funds where you don't have to go through any what's called underwriting, which is like a test to get insurance. And so, therefore, you can get insurance inside super that you might not be able to get outside super. And so, it's once more just one of those things, one of those little checklists to say, yeah, this is important to me. I want to explore it more. It's quite difficult again to work out what's what and who's who. So it's the sort of thing that you'll come and see someone to get advice from and then really just work out what's available for you and what's not available for you. But certainly superannuation can be a really good solution, in particular for athletes, to get some good sense of cover.
Excellent. That would put a lot of people's mind at ease, I'm sure.
Yeah.
Yeah, and again, it's just one of those things that you've got to learn about, right? It's the education, and then you suddenly start to realize, aha,
Ah,
there's value here.
there's all these benefits attached to my super fund that I'm going to learn to love that I didn't
Yes,
even know about.
love
And it's
that.
one of those things that if you go through the 6 things to know about your super, insurance is disclosed on that statement. But once more, unless you know what you're looking for, it's like, well, I don't even know what this is.
Yes, agreed. Okay, so we've spoken a bit about younger athletes and how they can set themselves up for a positive future, maximizing their superannuation. What would you say to athletes who might, already be well progressed in their career or feel like they're a little bit behind in this space?
If I had a dollar for every time I hear it's too late for me, I've left it too late, I don't have enough time, those sorts of things, let me just say it's never too late. The earlier you start, obviously, the more prepared that you can be, but essentially just starting for a lot of people is half the battle. And so I would really try and reframe that statement and say, please don't think that it's too late, or please don't think that you've left it too late, or that the kind of things have passed by. Just start. And the earlier you start today, so if you make the decision today, then it's one more day that you've got to be able to do something about it, rather than waiting another year and still having the same thought and then you've lost a year. So my advice to anybody is just start.
Love that. And look, it's the start of the year, so maybe it's a nice one just to put into that. What am I going to do this year to set myself up for success?
Definitely, definitely. And you don't have to tackle the entire world either. It's just starting with something. And it's not even starting with your whole super fund. It might be just be starting with, I want to know about the fees in my super fund, or I want to know where my money's invested, and kind of ticking them off bit by bit, one by one. And you'll actually really quickly start to understand the key or the important things that you need to know about all different parts of your financial life.
Yes, or even which is my super fund? Where is my
Yes.
money?
And how the hell did I get that?
Yeah, yeah, absolutely. And I just might touch on as well, if people uh, have lost track of their super accounts, there's a great place you can go online to find them. Is that right?
Yeah, it's the MyGov site. So if you
Okay.
jump into MyGov under the ATO site, and there's just a section there that's got superannuation. If you click in there, it's going to bring up all of your super funds. It should bring up the balances. It should bring up all of the things that you've got there. So that's the easiest way. Now, there's also something called Lost Super. If you're younger, as in a younger athlete, then typically this won't be your domain because the super system's got a lot more strengthened over the last few years. So hopefully you won't have lost super accounts. But there is a whole truckload of money sitting in Lost Super. So you can search the website, which is Lost Super as well, put in your tax file number. And if you've got a super account there that's registered against you, that will also come up in there.
And that could be a really nice little surprise for some
Absolutely.
people. I remember I had to do that some years ago because I was at uni and everywhere I went for my new job, they made you choose a new super fund. And so I ended up, I think, with about 3 or 4. And actually to discover them is like a nice little gift
Yeah. Oh,
because then you can bring it all together and start to feel more empowered. So that's perhaps a nice little present people can give themselves.
definitely. If you I've got a really kind of really tragic way to think about super, but thinking about it as your superhero. And if you can think about super as your superhero and that it's your financial cape to your future, and that if you can kind of attach a label to it, or you can attach your own hero to it and reframe it in your mind so it's not this horrible, evil thing that you just can't be bothered with. that it's this really powerful, cool thing that's actually going to be really impactful for you later in life, then having that reframing in your own mind, putting your superannuation fund with that sort of label might just help you try to like it a little bit more than what you do today.
I love that so much. Okay, so for anyone who is feeling overwhelmed, wants a bit more support, you mentioned it earlier on, we've created a free tool, which is the Super Check-in, which will be in MatchFit 360 Academy. So again, link in the show notes. And it's just really designed to help you gather your thoughts, not feel overwhelmed, and figure out what next. And if people go through that, what would you recommend as next steps?
Yes. So, one of the things that I suggest, as I said in the podcast that I recorded, I've got like the 6 things to know about your super, and you've picked up on most of them in your checklist. Putting a tick or a cross against them to say, yes, my super fund is doing well, or no, my super fund is not doing well, it actually doesn't take that much to work that out. But if you're struggling with that, either reach out to me, reach out to Nick. She can put you in contact with me, and we can have a conversation, really quick assessment of your super fund to say, is this the fund that's right for you, or should you be looking to choose another fund? And there's a whole truckload of different options out there. So it really is finding the fund that resonates for you and is going to deliver you the sort of things that are important to you, which again, we would go through in any sort of conversation.
Amazing. And you do make it fun, and it does sound so much easier than I think people imagined, which is why we're really excited to be working with you, Naomi.
So excited. And as you talked about at the beginning, my background is in sport. I've spent, God, I don't even know, 20 years in gymnastics. So as a coach, as a judge, as an athlete. So, certainly my background is in sport. My degree is in sport. I know a lot about what athletes are facing into. So I'm delighted with this partnership and the ability to help you all really start to optimize your potential when it comes to your financial future.
Amazing. Oh, I'm keen to hear more about that another time. And your gymnastics. Okay, well, thank you so much for breaking all this down in such a clear and reassuring way. If this episode has helped, please share it with a teammate or a loved one, or reach out to us like Naomi suggested, and we'll put all the links in the show notes. Thank you, Naomi. And I look forward to chatting with you again.
It's been my absolute pleasure, Nick. Thank you so much for having me on.
Thanks so much for listening to Becoming Match Fit. If today's conversation inspired you, feel free to share it with a teammate or someone you love as well. You can access free tools, resources, and our community in MatchFit 360 Academy. The link is in the show notes. Until next time, unlock your value, change your game, and become MatchFit.